Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast. Yes, again, the Stock Market Podcast because I've been getting a lot of questions yesterday about the stock market. Majorly because first thing was people are asking me, is this a good time to invest because the market has fallen? So can I come up and invest bigger money into this market? Second set of people are people who have been calling me to ask. Market has peaked. Look like the market has peaked, and markets have been getting volatile. So shall I take my money out of the market? Now, which one do you think is correct? So this has been a question that has been long answered multiple times, but then I thought I should address it at this point of time because there are these two set of category of people who are actually sitting in the market at this point of time. So if you have your mutual fund investments that in equity, that could be via mutual funds, or even if you have direct stock purchase, let me tell you how to time the market. Now, first thing is we need to understand how the market cycle works. Now, a very important thing at this point of time, let us just go back to the Corona days. When Corona happened, the entire stock market fell. That was a time of fear, right? When that fear came in is when was the right time to invest. So all those people who actually withdrew money fearing that the market's going to fall big have actually only lost money, but those who only continue to invest during the time is when people made money out of that investment. So that is how the markets are. Similarly, when the markets got into that fear mode, see, there is something that you need to understand about the rate cut cycle. That is the interest rate cut cycle. So central banks immediately, when the entire markets were down and entire country was fighting Corona, everybody was in a tough situation. So there was importance of liquidity in the market. So they need to pump more money into the market. How do we do that? By reducing interest rates of car loan, home loan. All these interest rates are actually reduced, and when that reduces is when that adds some support to the economy, and because of that what happens is the people start buying more car or buying a home, and that way the economy starts stabilizing and then the market starts recovering. So this is a cycle. Now after that, what happened? People were enjoying low interest rates, so they started splurging more, and then the expenses started going up, and then automatically the inflation started going up. What is inflation? Inflation is nothing but how much the cost of a product increases over a period of time. So for example, if you look at a liter of petrol about 10 years back was less than about 60 70 rupees, and now today it's more than 100 rupees. So that is inflation. So when people start spending more, inflation goes up, and when inflation goes up, RBI tries to control the pricing, liquidity in the market by pulling out fund from the market. How do they do that? They start increasing the interest rates. So at this point of time, the interest rates are at its peak. The RBI has increased, and then of course the increase has stopped in the last few months. But then every periodical policy meeting that they have, they kept increasing, except the last few meetings. So that means at this point of time, the interest rates are at its peak. Now, see, we cannot judge the market over short term, like 1 week, 1 month, 5 months. But then over a period of time, like 1 to 2 years, that can be kind of easily predicted. So at this point of time, we know Indian markets are going to do great in the upcoming 1 or 2 years, or not only 1 or 2 years. In fact, we have a lot of data that proves Indian market can be doing great for next 5 to 10 years. So with that longer term view, it is easier to invest. Now, why easier to invest? Because at this point of time, the markets have seen a rate cut when the market was in trouble. That is, the rate cuts happened when Corona hit. But this time, rate cuts are going to happen when the market is doing well, when the economy is also doing decently well. So, for no reason but just to reduce the interest rates because it has been kept high for a longer time. So, as the inflation also would be in control, they would want to do the rate cuts, and that is the time markets will further rally. So, because of this, one of the most important thing is at every dip, I only look at buying, and if you want to book profit, whenever market hits a record high, that is the time you should start booking profit. You may not get the tip of the rally, but again, you need to book profit only if you want that money temporarily. If you don't want it, just forget, let it stay invested if you're a long term investor. So, if you're starting to think that every rise I should pull out my money, You might even miss the further rally that happened. For example, when the market hit a all-time high of 20,000, everybody said, wow, markets have hit a all-time of 20,000. Let me book some profit now. With 20 to 21,000 people who booked profit at 20,000 felt, oh my God, I missed the rally. People who booked profit at 21,000 felt that 22,000 has come, and 21,000 has come, let me book profit, and at 22,000 they felt bad about it. Those who held the market, held the stocks or investments till 22,000 felt very happy that they could get the peak, but could they book the profit? Definitely not, because before they book the profit, the market is down from 22,000. So this is how the markets are. Nobody can ever time the market over a shorter period of time. You can never touch the tip of the top nor the bottom tip. So it has to be always in between, and that is how your investment should be. So the best way to actually continue the investment is always, first, the most important, have a SIP in equity mutual funds. The most important thing. As your equity mutual fund increases, take that fund and move it to some amazing portfolios of stocks, which is handled by beautiful fund managers, which can give slightly higher return than a mutual fund. And then the highest peak would be the AIF, alternate investment funds, which have been giving amazing returns. So this is how your investment should go. SIP is the most important thing that every human should have. That's something I would say, because that SIP brings a discipline of investment into all of us. So that's the most important thing. Got it? So these are few things which is something I want to talk about, the timing the market. But now let me come to the update on the market yesterday. So yesterday we could see again SDFC opened with a gap down, and that was looking like it has bottomed out, and from there it has just gone up really well. So we had done some investment day before yesterday when the market fell, and that has kind of yielded some decent fruits. So markets are looking like it is of course in a volatile phase, and today being the last trading day of the week, because tomorrow is a Republic Day and next 2 days is a weekend, so long weekend. So in fact the markets are not working only in India tomorrow, whereas the global markets are working. So again, based on that, markets can go really volatile, and a lot of people who have actually shorted the market when the markets fell would look at probably covering up their shorts. That is one thing, so that could probably give some rally upwards. And second important thing is of course the HDFC and Axis Bank results have looked like it is kind of settled in now, so the market should kind of stabilize at this point of time. So of course a lot of people would feel that if this is the kind of movement at this point of time, what could happen next month when the budget comes? My God, I would say it's better to stay away from the market the last 2 weeks of Feb. First 2 week of Feb, I may be active, but last two and until budget is over, I'm not even planning to be there in the market. Trading, investment, of course, would continue as usual. So this is how the markets are looking at this point of time on a broader view, but looking at a shorter view for today, markets are going to be looking very, very volatile. Day before yesterday, 500 points fall, and yesterday 200 points rally up. My God, what do I say about markets? It's like crazy. So trading has become very, very difficult, in fact, at this point of time, the way the markets are so volatile. But for long-term investors, it doesn't worry at all. So if you're a long-term investor, just stay invested, sit with the right SIP investment, just monthly, whatever it is. You can start a SIP as low as 1,000 rupees a month. You know that? So, but cultivate that habit into you. Make it as every month goes, every year goes, try to increase your investment into SIP. That way you are more prone to get amazing returns in a good SIP. But then again, selecting a right portfolio out of more than 5,000 mutual funds is very difficult. That's exactly where MPI Invest comes into picture. MPI Invest is your one-stop solution for all your investment into SIP, mutual fund, AIF, PMS, FD, of course, fixed deposit. We have, we tied up with good banks like HDFC and all, where we have fixed deposits, we've got recurring deposits, we have fixed return investments, we have SGB, sovereign gold bond. And if that was not enough, we also have all insurance products like your life insurance, health insurance. And the best part is you get all these consultations free, and only if you decide to, if you like our interaction with us and understand the logic behind our suggestions, only then you need to go with us. There's no compulsion. So isn't that great? So schedule a meeting with us just online right now at this website given, that's mpiinvest.com, and we will connect one-to-one. So that's it for now. This is Srikanth Rajan signing off until we catch up on Sunday with more details on the market in the Market Pulse video, because the next 3 days is going to be holiday. Enjoy your long weekend. See you tomorrow. Wishing you all a happy Republic Day in advance. This is Rikant Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share. Goodbye.